Hello, full-time hustlers. Today we have a very special guest with us, someone who truly embodies the spirit of entrepreneurship and the American dream. With over 25 years of experience in the real estate industry, he has conducted over 1,000 transactions spanning development, financing, and syndicating projects. He's not just a seasoned real estate professional, but also a visionary who believes in creating equal wealth building opportunities for everyone. Please join me in welcoming the founder and CEO of DiversyFund, Mr. Craig Cecilio. And if I said that wrong, Craig, you can correct me. But welcome to the show.
That was said well, Jason. Appreciate it. Thanks for having me on the show.
I don't mind the boxers in the background. They want to be on every podcast. But Craig, before we dive deep, tell us something about yourself not many people know.
Some people know it nowadays, but I'm a really big biohacker. I'm huge into biohacking and mental health. So I've been diving into that over the last 3 years, hot, cold therapy, customized vitamins, going into the sunlight for better exposure, for better health and wellness. So that's one of the big things about myself that I haven't publicly pushed out. Big into that stuff.
When you said that, I got into, are you familiar with, when you say biohacking, I got into nootropics a while since 2016, 17, and called myself a biohacker. Is that the type you're talking about, or you mean actually the regime?
Yeah, that's a little bit of it too. I'm starting to study nootropics a little bit. I tried some of those. So always anything the latest and greatest I'm trying out and trying to just kind of get an extra edge here and there.
So what's the most adventurous thing you've ever done?
The most adventurous thing I've ever done. Okay, so this is kind of tricky of a question for me. Most adventurous.
Definitely existential question.
Yeah, a lot of adventures in my short lifetime. Let's just say, adventure stuff. Geez, so younger, I would say, kind of crazy. I remember going to some island off the coast of Venezuela with my dad. And we were on this plane from the main airport to like this island. And it was kind of one of those planes like this and it had chickens in the back. And I remember trading someone like chocolates for cigarettes at like 15 years old. And then we were able to go to bars back then. So that was kind of a cool experience. It was kind of crazy because I saw, I'll be politically correct. I saw like chicken fights there too for the first time. That was quite an adventure. Going out there
and learning the rules of the trade, literally in this case it's cigarettes and chickens and going to bars. I see how that can stick in a memory.
In a different country, yeah, with like really lawlessness going on there. It's crazy.
If you weren't in the real estate industry, which other profession would you have chosen and why?
That's a great question. Today, the answer today is different than the answer of 10 years ago or 20 years ago. Today, I would say I'd probably go into some kind of public speaking, motivational speaking, or private coaching.
I like that. And I say that because I'm jaded in that I listen to them. So let's talk about your current venture. Tell us the story behind DiversyFund. What inspired you to start this venture?
I think I knocked my head on a piece of metal or something because I always question myself, why did I start this? But really, it came up from more my upbringing, and I was born in more of a working class family. Let's face it, I say middle class, but both my parents worked all the time. Get up in the morning, dad's already gone to work. Mom was a school teacher. We lived in an affluent area in the Northeast, and seeing there's country clubs and being around all these people with a lot of wealth. I always didn't really question it that much, but as I grew older, I kind of started recognizing that we weren't the same as everybody else. And always ask questions about that. And it was kind of intrigued me of how people built wealth. So that's what kind of the seed was planted. And fortunately for me, my parents educated me well. So I went to some good schools in that process and learned more and more. And that kind of laid the seeds and the foundation. So when I eventually, when I graduated from college, I had an idea of what I wanted to do. And fortunate for me, I met a couple individuals. One was a person, let's just call him, who taught me how to structure deals and raise capital. And he had a background as an attorney. And another gentleman I met, he was a real estate developer. So I met both these people around 23, 24 years old. And they were kind of my first mentors to teach me kind of two sides of the business, really, how to do the real estate side and then how to raise capital and structure deals. It was the education I got from both gentlemen it's hard to imagine to get that from any book or from anyone else, but I got a lot at an early age.
They said that and in my I'm gonna use the phrase, my North Carolina public education system, they say that if you have any success in this, and there's a testament I've seen with the successful entrepreneurs as well, I always look around and think a teacher, and the word teacher in that is, the mentor, and that monkey see, monkey do is how we learn. So I'm glad that, in your story that it sticks to that pattern, that it's someone took you under their wing and gave you a lot of knowledge, but also to the point, like you do have you got to see the mechanics and like how investment runs, but also like the mechanics and to start the fun, which I think is missed by even a lot in finance, is that they still don't know, the underpinnings of what makes a fund work, et cetera, et cetera.
Yeah, that was important. Seeing both sides there. It's like, hey, this is actually how to manage a piece of real estate, because you get a job, even as a
one thing to manage it, there's nothing to know how to fund it, and then you got now once you fund it, you got to keep the property.
Yeah, and then you gotta have the investor relations side, and how does that work? And it's this whole cycle. It's all these moving parts all the time. But to have all those pieces being exposed at an early age, it was easier for me to get on that path than anyone else, because I had all the pieces right away.
Absorbed it like a sponge. So what's the most challenging deal you've ever closed, and why?
Closed or there's been a tremendous amount of challenging deals over the years. I've done tons of transactions. The one I could say, usually I like sloppy deals at the end of the day, because sometimes there's more risk and there's more upside. So I remember doing a sloppy deal on something that was over the holidays, and I bought this house on almost like a cliff for like $90,000. It was falling apart and everything, and we ended up selling it for like $400,000. So that was a pretty small deal. But the
margins on that,
yeah, the margins were really good on that one. I thought I was like kind of changed the neighborhood too, and the person who bought the house ended up just messing it up. But it was really a really messy deal. In the fact that what I'd say messy about it is like you're diving deep. I took a chance on it because I really didn't know the foundational issues on that property, and I just said, hey, this is so cheap, I don't care. And so I really kind of just tried to bring a couple engineers by, but still I had to make the call real quickly, and it turned out to be okay.
I think that also embedded in that, and for the listeners also, probably how that came to be good is a lot of that above average knowledge, a seasoned expert that you really are, and that I wouldn't recommend the average person to go chase those whims, but in the same token, it has a lot. It's probably a testament to you, and that did turn out a win. Now, whether you can see it or not, but you, again, being from an early age, you're more seasoned than even probably your peers, and that shows when you can, turn something that should be a turd and actually sell it as the diamond. Not with the property.
Yeah, a lot of bad wounds with that one. That was, a little secret there on that one. The timing is around the holidays. A lot of people don't want to transact. They're taking time off. However, there is people who need to transact. They need to sell some assets. So I always feel like a good time to purchase stuff is towards the end of the year. There's not a lot of transactions going on. There's not a lot of broker activity out there. You could get things. I always felt like, hey, this is where I could buy some discounts on some of the assets.
Actually, that goes right in line with what Warren Buffett would say. Not that he knows what he's doing, but going against the grain. And I know we all say that, and I say it too in investments and all asset classes. And yet it took a light I'm sure I wouldn't pass. Like going against the grain is harder as a verb than it is to articulate it as nouns and adjectives. Just saying it now. I mean, like what you're describing is just that. It's like when they say it's not popular, like, don't buy in the holiday season. Nobody's buying there. And then here comes Craig, like, hold on, but this is a good deal.
Yeah, so there's not a lot of people next to me who are trying to make an offer on that at that point in time. That's kind of the kind of mindset. There's some people who need to unload some stuff, and there's not a lot. Everyone's kind of enjoying the holidays. There's not a lot of buyers out there. So
arguably that from a company perspective, I don't know how much of that extends to the corporate strategy, but that definitely gives a place, a positioning in the markets that, to have a position, you have to be somewhere where someone's not, simply put. Again, North Carolina education system talking. So how do you stay updated with the latest trends and the changes in the real estate market? I mean, it's, I know there's cycles like everything else, but someone with your depth and breadth, like, how do you stay updated? How do you stay in tune with the, where the pulse is at?
Yeah, that is the media is a tough place to be. It's tough to read this stuff out there. So kind of looking at the data, and my definition of data is everything. Is like, hey, what's the hardcore data that most people have? But really for me, it's the relationships I built, the other CEOs, the other people who are in the game today. How are they doing? What are the building those relationships that are real? Like I might see something online about a competitor and someone comes in and tells me, oh, they're doing this. I'm like, no, they're not. I know the CEO. I talked to him last week. This is actually what's going on there. So you kind of build those relationships over the years, build those rapport. Even people who are competitors, you could gain knowledge with. It's kind of like you share information back and forth. And that is kind of a skill just to develop that over the years and hey, maybe 1 second someone's your competitor and 1 second they could be your partner in something. So it's always keeping that door open and trying to be fluid with that.
That's kind of parallel even from real estate in my world and alternative finance. I first started, I came from VC private equity to alternative finance. And if you told me then in my non-educated self, I would have told you that banking was my enemy. Oh, and I could have broke you a thesis, but I didn't. Turn to find out in the half a decade later, this is my greatest lead source. Because when they say no, who are they, when somebody's trying to get funding, they're going to go to the bank, but the bank can't. Well, it's an easy win for me, and I didn't have to do anything other than just have a relationship with the banker. But yet, 10 years ago, I would have told you, oh, I hate banks. I'm gonna uproot them. I'm gonna democratize, the fund. Well, come to find out, I do very good shaking my competitor's hand. They keep the client, I get them funded. It's a win-win. They stay at Wells Fargo, et cetera, et cetera. So I like that. So kind of a parallel there between real estate and finance. What qualities do you believe are essential for someone to succeed in the real estate industry? And I'm going to really tune into this one because I think we're all wanting to know that.
Qualities. I mean, it's grit, grind, resilience. You just need to keep going, keep grinding, being resilient. There's highs and there's lows, and just keep going each and every day. You need to have that determination inside yourself. It's not easy. It's not going to ever go according to plan. You're going to have good days and bad days, and just having that wherewithal inside that, hey, these things being thrown at you all day is just the way it is, and not being so emotional about things. Is developing that muscle. This is just the way it is, and don't be triggered by those events. And that's something a lot of people don't develop. It's just like a muscle. It's a mindset that you have to develop. It's like, hey, I'm problem solving all the time. So, hey, excuse me, my brain's always problem solving this because it's not this or that. There's no adjective defining what happened. It's just an event that happened, and how do you deal with that? And it's, again, a lot of people try to do it and they just can't handle the pressure with it. And there's a lot of things that are unexpected. I always feel like it's like a game of whack-a-mole. Like one time I solve one problem, another one pops up, but I'm used to it now. And I'm like, okay, bring it on. Whatever it is, I am able to deal with it. And as I talk about that, you need to have that confidence inside yourself. So I think maybe that would be the first thing, is you have the confidence to go into that minefield and be able to navigate that, and believe in yourself, have that confidence that you are resilient, and have that grind, and that everything you do is learning. It's constant learning.
In the Marine Corps, when we would stand before meritorious promotion boards, which for those not that familiar with the Marines, meritorious is you did really good, and the Marine Corps has a mantra telling you that you didn't do really good. It's kind of the green, the beating shall continue until morale improves. Where I'm going with this is on those boards. So these are the really great Marines that are going through these meritorious boards, going to promote early potentially. There's this trick kind of element that's in it. And they're going to ask you, the board will ask you the board's all high ranking officers and enlisted. They'll ask you, like Marine Corps history, and questions are way beyond that you could possibly answer. And the point that you learn over time, or smart if you go in the first time and know it, is it's not you getting the right answer. It's how you give the wrong answer. For example, I was on one, and, when did Chesty pull, or what happened in Bellawood, and, some battle in World War II. What they want to hear you give is that confidence that you're alluding to that you will need in the battlefield, because I can tell you in combat, things will be, no battle plan survives first contact. It's going to go to chaos, but you cannot sit there and fall apart. That's the real that they're trying to weed out. You have to have the confidence that even if I'm wrong, I'm confident that, hey, this is the path I'm taking. And I really like that you're mentioning this over. I don't think there's anywhere that we really instill confidence in our society. I guess you either have it or you don't. It's shaped in and wherever we learn it, but it's a trait that I do think is invaluable in many ways. And I'm very glad you're highlighting that one as one of the successful ones, because though I'm not a real estate expert, completely an amateur, I can 100% resonate with that notion.
Yeah, you could definitely, I believe you could develop it. And so if you have the underlying grit and grind and acknowledge, hey, maybe I don't have this today, but I'm going to practice again and again and again.
I really like the way you're saying that. That's an empowered statement. The way you're saying, even if you don't have something, but I can, it's not that my chips are down, or, it's you're taking power even when in that statement right there. It's like, yes, if I didn't have something, I can do it. And just saying I can is the statement, instead of saying, well, since I don't have it, somebody, it's Craig's fault, I'm gonna blame him, and for the rest of my life just suffer.
Exactly. Agree. Couldn't agree more.
So let's talk about this current venture. Tell us the story behind, because every startup and at inception to all the way to the size of Apple, they have stories. So tell us the story behind DiversyFund and what inspired you to start this venture.
Yeah. So since I've learned this business today, I call it like kind of steroids of my other business, which I was doing syndicating deals. And my customers were always high net worth or institutional investors. And I'm sure a lot of people listen to this, and yourself as well. It's kind of like, it's about money. It's greed. It's about, hey, how much money I could do on this. And I'm not sure if people negotiate with these people, but there's always like, every negotiation's different. There's no kind of process to it. A lot of the times, not saying all the times, like you're about to close and there's a renegotiation. It's like a trick. He who has the money changes the rules, I like to say.
Yes.
And so you go through that, and you go after a while, I had to pick up my phone and going, hey, this is Craig, who's giving you double-digit returns your whole life. How about a thank you, right? You don't really get that kind of thank you from them. So you're kind of navigating in a world where it's all run by greed and how much people can make and how much, I call it the turkey bone, how much meat they could take off the turkey bone for themselves.
Very transactional, no human in it, no human element.
And they like to give you just a little bit of the meat on the bone, just enough so you can survive, a little morsel, but not enough. And then I saw all the stuff that came out of the Jobs Act in 2012, how, hey, we could open up alternative investments to the individual investor, to anybody, regardless of your background. And it kind of hooked me in. I'm like, hey, I could relate to that. I was born with a family who didn't have an opportunity. Maybe this is why I study this stuff. Maybe this is my purpose here, is to do this and show this kind of shadowy world to everybody else. And that kind of was like, okay. And then I saw it and I studied a little bit more. I was like, I got to do this. I got to do this. And the next section was like, how do I figure out how to do this? I'm like, well, I've done this before. It's the same thing. I used to put 10, 20 people in a deal. Now it's like 1,000 people in a deal. I could do this. Oh, I could. I know marketing. I know how to find a deal. I know how to, all the legal stuff. Oh, now I just have to figure out how do I apply technology on that. That's the thing I wasn't that strong in. I did it. I just went to work at it and started, probably incorporated in August 2016. Here I am 7 years later. We're about $500 million in real estate owned, multifamily, 30,000 investors, about over 500,000 people have signed up for our platform. I have an app. I built out a payment processing through our site. It's not like you can't see it, but behind the scenes, that's us. We own that technology and all the banking stuff. Wow. I have a chief compliance officer. Never thought in my life I'd have to hire a chief compliance officer. It's like the worst thing, because it's like 30 grand a month going to like just a non-revenue position, but it does protect you and let you sleep better at night. But, you build yourself out bigger. It's just more, more money, more problems kind of deal thing. And so you need to kind of get your defensive plank going with your compliance officer. And here we are today. We've navigated these waters with all the changes happening in the world from 2022 to 2023.
Mm-hmm.
Before that, had to navigate the the pandemic, the inflation, the pandemic itself, the work from home culture. Like I said, this has been a lot of whack-a-mole these last 3 years with things. And here we are in a new environment where I love it. I love this environment today. I like the uncertainty going on. I think there's going to be a lot of opportunities. I think there'll be a lot of opportunities in real estate for people who are patient, who are liquid. And now I have a vehicle for people to participate, to at least have a little piece of that turkey bone I talked about. Whereas traditionally, it's these institutions go in and they buy billions of dollars of assets on pennies on the dollar, and they make trillions of dollars, billions of trillions. And here I have a vehicle where I could have anybody participate and get a little piece of that turkey off the bone here. So I'm pretty excited for this year next.
It's the People's Real Estate Fund, and I'll say that. I will say that you did, but it's sounding like there's the narrative of it's for the us. It's for who you were. You were building the company for those that are like you when you were before you now. Very humbling in that story. How does DiversyFund differentiate itself from other real estate investment platforms? Because I know there's a noise. So, the competitive differentiation here, what is it that we can only get from you?
We're unique in an enormous way. We're an online digital place platform that's open to everyone, regardless of your socioeconomic background, connected to that you become a part owner in multifamily real estate. We own the assets themselves. We own part of those assets through our structures. So you got the best of both worlds. You could participate for various amounts of investment sizes, regardless of your background, and you have the participation where you become part owner of this real estate portfolio.
Wow, like really my hair is standing up when you're saying this, because there is a narrative of we the people that's embedded in this. What challenges did you face while setting up DiversyFund, and how did you overcome them?
We don't have enough time to go over that.
Where do you see DiversyFund in the next 5 years?
I want to talk about some of the challenges. Like it could be like it's crazy because it's like what's happened over the last 5 to 7 years, and influence of.
I can just imagine too from your shoes, because there's been a change in the industry. Plus, like you're coming in, and that's the differentiating spot. That's to ask challenges. You could spend a whole podcast series probably, and I'm assuming that that's not incorrect.
The first couple of years was easy. Everyone went to you, and the signs were easy. Customer acquisition costs were low, and then cryptocurrency came out, and then everything got expensive, right? Everyone just
I wouldn't even think about that. I didn't. Wow, but now you said it makes perfect sense. But yes, that is a competing. Yeah. Like, am I going to invest in yours? Am I going to spend my investment?
Own a piece of an ape and make 1,000 extra money, right? And that's what you're competing against. And at the end of the day, and then
how do you compete against that? Wow.
Well, now we can, because it's all what's going on. But
well, here's the strongest thing. You could say, well, I'm tangible. Here's the house.
Yeah. Then you're going, and then all of a sudden you hit this, and you're like, one day it's the end of the world. You got the pandemic coming at you. What are you going to do there? And we actually had a plan before the pandemic, which I'm proud that we executed. That plan is before the pandemic. We wanted to execute a plan where we were spending a lot of money in marketing. We went to 5x our marketing budget. Actually, it was like 7x our marketing budget. Take it from $100,000 a month to $700,000 a month.
Wow.
And we rolled that out to get just to get customers as fast as possible and just learn as fast as possible. So in March, we were supposed to launch in March 2020, and we did. We launched because that was our plan. So we went ahead with it. And it was great because a lot of the media placements and costs were lower because a lot of people weren't spending. They were like, oh, what's going on? I'm like, no, let's spend. Let's be counterintuitive. There's
a narrative in the pattern in what a lot of what you do is counter the grain, not counter narrative, but you are not where the masses are. You're kind of ahead of them, whether it's buying in December or now. It's like you were positioned right at the start when everybody else is still trying to tie their shoes.
Yeah. I'm a kind of a philosophy type of.
I don't know if you're doing this consciously, but you are kind of ahead of the storm, and I hope it stays that way.
Yeah. So it's like, take some of the military doctrine, Sun Tzu, go where they're not, right? Kind of doctrines, kind of where I was. But I mean, you kind of see patterns over time too. And so you could see those patterns. And if you can pull it off, because it was not easy to pull that off. We had to raise money for the company at the same time we're spending. And you had all these people going, hey, is my life going to be safe at the same time? So it was a lot to juggle.
You're spending, and that's, I want to just drive that. Like, I don't want to trade plays with you. I do tip my cap in the sense that, so you're spending the most you've ever spent at this current moment, / also still fundraising. So it's like that's the first thing to give the investors caution. They're like, well, you're just going to burn through our money. And it's usually, even if it's a default no, but it's like you're making it harder, and yet somehow you're still here and you did it.
Yeah. It was we did it. So and we went from 2,000 customers to 30,000 customers because we did that over a 2-year period. So you could say that kind of.
How do you handle the staff and like the infrastructure that kind of change takes from that kind of onboarding?
Well, that's why I do the mental health stuff. It's not to balance that out, because you had to learn. That's another thing you had to build. That's like, okay, how do I learn with all this coming at me from all different angles?
That's almost two different companies, even if it's the same. It's like that's two completely different operations.
So then I realized I had to work here, right? I had to work on myself, my mental side. I had to get tougher. I had to get stronger. So I had to dive into that. I'm like, as much as I got up every day and had to read those P&Ls or deal with that employee or deal with that investor or deal with that property, at the same time, I was like, how do I put some time into myself each and every day too, to be the best version of myself and have that best version show up? That really tied into it for myself to be where I am today with things. And the challenges are always there. That you're always going to get challenges on this, because it's just not real estate. It's the markets, it's finance, it's just people's different opinions and things. There's a lot of moving parts here, and it's a lot. It's a lot of things, and just being able to balance that out on a day to day and show up and just keep studying, keep grinding, keep dealing with it. It's every day something new gets popped up at you. And and after a while, it just becomes habit, and it just becomes for me, I have a smile on my face. I could be going through a tough time period, and I'll have a smile on my face. And that's what it's all about at the end of the day.
Gary Vee talks about it contributes a lot of his success in that he's not faking it. He genuinely loves what he's doing, and he doesn't accept the praise or the criticism because he himself loves it. And it sounds like that's exactly what you're saying. You are in, not to be too cliche or abstract, but in the lane that Craig is supposed to be at right now. And come hell or high water, you're doing the dang thing, so to speak. And it's showing. It's like you're the verb. You're the literal expression of Nike. Just do it. I know it's a lot harder than that, but yet that's exactly what you're doing. And it sounds like that, and I love that you say you've got the smile on your face still, which I don't know many that could say that, even when they get into something 10 years later, turn around like, why am I doing this? And, they cue the existential crisis.
Yeah, I have a saying, do, learn, grow. So constantly take the action, learn from it, because we could do things and just not learn from it. It's just, if you have kids, you understand that because they do the same thing. You're like, way to learn. And that's where the growth happens. That's when you're like, okay, what I do? I took this action. Here's the result. Okay, what can I like that result. I'm going to do that again. So that's where the growth comes in. How do I change that approach next time? And that's where the growth comes in. So I call it do, learn, grow. And if you could attack life that way, I think all of us has a potential to go way beyond ourselves, to do incredible things. And there's a lot of people out there who do incredible things, and everyone wants to study like the why they did this, or even how they did it. I think more people want to know the how. Maybe they should study the why a little bit. I think the why will give you the how, but how they did it is, I think, who they are and the why. But they did it is they just kept going. They just kept going and learning, and they had the grit, they had the grind, they were resilient, and they had that courage, and the confidence to keep going and going and going. And I talked to a lot of people, and a lot of people at the end of the day, it goes back to those basic traits, and I almost call them values at the end of the day. If you go into this knowing you're going to learn something each time, don't take things personally, and just keep going, you can achieve some great things.
Well, you said you in another career you may be professional speaker, I can tell you, Craig, there's like 3 TED Talks that I'm going to hold you to that are coming out of this dialogue that just are, I mean, the grit and the persistence. I feel like you could write one of the TED Talks just on entrepreneurial at large. So I want to skip before speaking of that, about the question of the 5 years. And what advice would you give someone looking to invest in real estate? So now we're taking that, Craig, wisdom and looking at insight into the future and talking to someone like myself, say naive, and saying, what advice would you give me if I was looking to invest in real estate for the first time?
I would kind of get to know what your goal is here. First of all, what is your goal? Do you want to be someone who's very active in it, or do you want to be more passive in it? So that's based on that. Then we can.
I would like to tell you that I would like to be active, but really what I'm saying is as lazy as possible. And I think I've gotten to a point where I could be honest with that, but I know you weren't really asking me, but even then it's hard to even explain, the goals, because I'd like to say that I'd be an active investor, but no, it's, can I get money and get a check, every 30 days type thing?
Yeah, it just depends on kind of what you want to do. So for people who want to get their feet wet with some rental properties, you can own it yourself. You go out there and get a bank loan, try that out, just kind of put the numbers together, see how that works. You become a property manager yourself. You have to do that and understand how that works. And there's a lot of work involved with that stuff.
Absolutely.
Depends where it is in different areas. I have owned stuff across all different parts of the cities and towns and country, and each one's kind of different, has its own experience with that. If you want to be a more passive investor, now there's more tools. Our platform is one of those tools where you go in, you give someone else the money, they do everything for you, and then you make a little bit money that way. Yeah.
Turnkey. I'm gonna say that's turn. I know passive is the phrase, but it's the type of investor, because I can't get it, because at least for those like me, I can't learn I can't trade places with you, Craig, as much as I would envy you, as you have. I mean, you've got a running start since you were a child groomed, and I'm good in my lane. So it's like, what would I be doing to get out and try to go and redo and become an active real estate investor? And the ones that I see, and I work with a lot, I don't want your work schedule. I don't know what yours is like, but it's constant. And now, and as you're saying, you're growing a team. I can only imagine what it's like for you. I mean, you almost have to live this.
Yeah, there's a couple ways to do it. I think the first thing, let's say you're brand new and you want to run a project, right? So you're going to have to understand how all the pieces come together. So if I'm brand new,
you've already lost me.
Yeah. If I'm brand new and I'm going to someone, hey, I'm pitching someone, hey, I got this deal. Would you want to invest with me? And they're going to look at me like, well, you've never done this before. Why should I trust you doing it? So the first thing I would focus on is find a great deal. Find a great deal, because that's the first thing. Find a great deal. The second thing is you don't have a track record yet. So there's a lot of moving pieces here. You might need debt. The lenders today, forget about it. They're not giving anyone debt. It's hard to get debt today. Debt's expensive. But then I would find a partner, right? I'd go out there and get that. And so now I'm establishing a track record, right? I've got a great deal.
Yes.
I'm going to rent it, and that partner is going to be strong in areas where I'm weak, right? They might be strong on raising capital. They might have the capital. They might be strong on some of the operational components that you don't want to do. So I would match myself with that. They might be able to get the whole capital stack for you, and you might make a little bit out of it. But if you make, like, nobody knows if you made like 5% on the deal instead of 100%, because you have that as part of your portfolio, your track record. So you could go and brag on your second deal. So don't think of your first deal as like you're not really doing your first deal. You're doing your next deal and your next deal and your next deal. And so you're trying to get that experience. And what better way to get experience is to team up with someone else. And what's your carrot? Well, your carrot is a good deal. If you have something that's really high, great return, there's people out there who could do it. And that's the thing. Yeah, they're going to take a lot of the meat on the turkey bone, but you get to walk away with that experience. And that's what I'd have to negotiate. It's like, hey, you know what? I'll do this with you. I want a piece of the action, but I want to be an active participant with that as well. I want to see all the pieces and how it works. So that's how I would do it. I think I did it that way, actually. So when I started, but that's how I would do it again.
So to make this topic muddy in the water for someone that, assuming the person, right, at amateur status and want to get in to muddy the water even further, I have two semi-controversial questions, and it would only give them make it harder. There's a lot of talk about the real estate bubble. What are your thoughts on this, and how do you think it will impact investors?
I'm more in the commercial space, apartment space. There is a lot of stuff that's going on there.
Is yours more steady?
It depends, right? the data. You gotta look at the data. You gotta look at the banks, their exposures. There's a lot of moving parts there. You got some cheap debt and properties. You got some properties that have balloons coming due and something's gonna happen. You got things happening behind the scenes. Probably trades going on with banks who are selling their portfolios to other players, and how are they gonna look at this? And I actually think it's gonna be, besides office, I'm not going to get into office right now. That's a whole different conversation. But it's that actually, I got to pull that in here because I'm not sure of these larger banks, their portfolio exposure to what is multifamily, what's apartment, and how that is. Because I think a lot of decisions will be on their specific portfolio. But there's going to be a lot of wheeling and dealing behind the scenes on that. They're going to be selling stuff up, the good and the bad together. And I think it's going to just go down, I don't think it's going to be a horrible crash. I think it's going to be discounted. I think some people are going to suffer. I think there'll be some banks that are going to be some negotiations. There's going to be some mergers and acquisitions going on. I think we're going to see a lot of mergers and acquisitions going on. I think the bigger banks can get bigger at the end of the day, and they are getting bigger. And I'm not sure. I think we need to get like Teddy Roosevelt back here, the antitrust stuff going on. Remember they blew up all the big oil companies?
Yes.
Yeah, but we're not blowing up the big banks. We're not blowing up the big online platforms. That might have to happen.
It's a very astute point.
Yeah, and so seeing that, so I see a kind of a soft landing there. Whereas the liquidity is really going to cripple, I think, and we're not talking about real estate. I think the small business owner is really the one who's in trouble at the end of the day, more than anything else. There's no bank loans for them to help their business out. And if people aren't making as much money and spending as much, I think that's where I have a little concern right now. And if you're, if you own properties and retail properties, and you have a lot of these small businesses as your tenants, there's going to be some kind of something going on there with that. It's tough. I think the businesses who made it through the pandemic, you saw how that was tough. Now they have to face this again. It's going to be tough for a lot of people. So I think we're going to see a little bit of a drawback in consumer spending here.
I can tell you that in one way you and I relate. Literal men alternative finance and truth and advertising what made me come full tilt. What I can see is, and what I say we relate, is I'm opposite the trend, and I can see right now that the statistic is 4 out of 5 of your average small businesses will get denied at their bank that they've been with for 30 years. However, that creates opportunities for those in my space to come in and try to serve that audience that is now growing larger. And I will say, Craig, for what it's worth, this podcast is not about me, but this is a shameless plug. Business is actually great. And I also know how two-sided that is, because for the first time in, I think, my whole life, I'm actually the first source now, instead of, and joke. And let's give my average client is not, big wigs. They're, the mom and pops around your corner, that own your plumbing store, on your construction, like those are my businesses. And yet they're coming in droves, and I'm sitting here and getting, talk to you and get off, and there'll be more leads than I've ever had and worked the least for them, which kind of gives a testament to what you're saying. I think small business, that I'm agreeing with you, small business, they're feeling it. And I really like the way you're giving hope. And I also, and when I see a lot of the buzz about real estate, most often, if you do look hindsight, it never comes to pass the way the buzz spins it. And I'll just leave that alone. But I'm very glad that you take more of an optimistic approach than, say, some of the doom and gloom that, surrounds us in papers and so, so to speak, real estate, influencers. So this next question, and I don't mean to poke, just to be objective and plus to give you a chance to respond. Some critics argue that platforms like DiversyFund might be democratizing investments, but are also exposing inexperienced investors to risk. How would you respond to this?
Well, I think if inexperienced platforms are introducing inexperienced investors to risk. So unpackaging that is, I really took a discount to do this. I'm 50 years old. I have 25 years of experience. I'm running a platform. I'm not a tech guy or a trust kid who's building something up. So I think you got to look at, like, some of the people who started the platforms up and their background. Are they a technology background? Do they have money? Where the idea ferment from them? Whereas I have actually been a real estate operator for a long, long time. So I really kind of understand what I'm doing at the end of the day. And as far as we're giving someone an opportunity here at the end of the day that they otherwise wouldn't have. There is a lot of compliance here. It's tricky. And then that's a code word. Expensive is the real word. And we'll talk about expense. When I say compliance, my head goes cost, right?
Right.
Compliance, cost. And it's highly regulated. This is a highly regulated space that we're in. We have the agencies are on top of us. They know, they have agencies within the agencies. Anyone who has anything to do direct to consumer, selling stuff online right now in the government's eyes is they look at you, they flag you, and they have a list. And they have a list of every company, and they will audit you. They're going to audit everybody. And we know this because we're very compliant, which I spent a lot of money on attorneys and former SEC attorneys and all those attorneys that we had to pay to understand how to navigate these waters. Most of the time, we don't know the right answer, right? You see what happened with cryptocurrency. We don't know. Now they're finally saying it's bad. Well, you guys knew, but it's an earlier conversation I had today. It's like, what do you think is going to happen when you take on the sovereignty of the U.S. dollar? You're not going to win. That's a fight you're not going to win. I mean, come on. I mean, it's like we're everywhere. We're not going to devalue the dollar with.
Oh, all right. Well, let me just move over.
But it's highly regulated, and to me, that's part of the game, right? This is the game. I chose to do this, and that is something that I am gonna continue to do. I will continue. And that was a very tough thing to go through these. Having the SEC come into your office and kind of go through your files and show them everything, and you're getting audited, and you're auditing. You have to be audited. You audit your parent company. You audit all your LLCs, which is your bank accounts. But this is different. It's not just that. And we hire firms to do it. It's like looking at your social media posts. It's looking at your advertising posts. It's looking like how you got your customers. And this is where they're at now. They're doing all that stuff. It's a little bit too much, I would say, because there's just, you're perceived to be guilty till proven innocent, and I don't understand why it's that way. But maybe part of me thinks it's like, okay, if I work for them and I get a big case, I could go and get $2,000 an hour when I move on to my next career, and everybody wants that, right? That's why you work for these agencies, because afterwards you're a hot commodity from a law firm, right? You start charging it, and then they start billing you.
They call it here in DC the open door or revolving door.
That's the game, and understanding that you're in that game, and that's what you have to navigate and figure out how you become profitable. Because at the end of the day, a lot of these platforms are profitable, and we're relying upon venture capital, right? At the end of the day, to survive. But how do you navigate that, get to profitability, and service all these people that you just talked about, and deal with all these extra costs? Because the extra oversight, again, that's okay. I don't mind it. I just don't like the cost, right? and really develop a good product and a good company. So, it takes a lot to do that. And I think that the person who's out there saying, hey, how do I trust these platforms is really, I wish there's like a stamp. They could stamp you like, hey, boom, here's our stamp of approval, but there isn't anything like that. It is kind of looking at the longevity of them. So as we come out, because this started in 12, first platforms were like 15 and 16. And the ones that have been around for a longer time, they're around for a reason, right? They're around because they've gone through that stuff. And I like to say we're one of the original ones that came out in 14, and we're still around today. Anyone else who's just starting out, just kind of look at that. How long have they been doing this? Who look at the company. How long has the company been here? That's the horse. Look at the jockey. Look at the team that's running it. What's their background? Mm-hmm. And it's just it's a lot to be done, but it's set up to protect people. In the business world, it's just not our it's just not our space, but it's anything to do with financial services and the digital world is getting heavily scrutinized. And there again, what you said, they're trying to look out for someone who might be unsophisticated. However, we have to move that out of the way and introduce something different. And I'm an advocate of how do we introduce education? How do we educate people? Because you could Google anything. Let me take that back. I could go open chat. So now it's chat. I could go to AI on anything. Right now, I have to get this in my vernacular. It's no more Googling it. It's more going to open chat. So I could do that with anything. So I need to take some accountability when I'm doing these things to do some of the research because we live in that world. So how do we educate people more? So there, you take two different approaches. It's like maybe instead of regulate, educate. And that's kind of where I'm leaning towards us. It's like, how do we create an educational component for people? Because they really want to educate them about this. Everyone nowadays, hey, you can learn about this stuff. Yeah, you can Google stuff. You go to chat to learn yourself to get the basics where this wasn't around before, right? This is new. The information we have comes at us in real time. So yeah, and like you said, I think that's the tricky part is the misinformation. How do you discern the misinformation from the real information?
Well, how does DiversyFund ensure transparency and trust with its investors, given all this conflicting narrative that you're facing again with regulators and the cost that creates in operations, and then the investors like want you to keep them in mind. See, how do you keep them ensure transparency and trust with your investors?
The number one way I would say is that we have audited financials that we have to give to the SEC on an annual basis. So they have our financials. They're going through our financials. It's audited financials on an annual basis. That is like the highest regulatory agency looking at you. That should establish trust. If there's anything wrong, they would let they would do something.
They sound the alarm, right? Because they are the alarm.
So that it starts there, and everything else to me is education. Is educating them about the product, education them how it works, tell them the why on things, why we do it this way, versus why we don't do it this way. A lot of people want a personal journey to try to get the content and messaging right to that particular person as much as you can. It's a lot of education too at the end of the day. So it's more. Yes, we have that overreach and we have that someone coming into our books and telling, hey, are we legit? That's one. But the other thing I think equally as important is the educational component and the personalization of the education is big because everyone sees things differently.
That's kind of exactly where we are in time and era as a species, you could say, at large. Is that we're getting, the turn of the century industrialized approach is dying, especially, and I'm a huge advocate of it in the sense of educating. It's like tailor it. Of course, not everything can be on the individual basis, but it's get it to me at least that I can consume and have value with it. And I love that it's education. What are some initiatives that how do you go about educating? And I'm really naive here and educating like a something we're talking about, which is like a mass. You're talking about a mass market / also try to tailor it as best as possible to an individual basis. Of course, we'll never get every individual and every nuance, but that just sounds like another variable you're having to deal with. You've kind of got like an academic program from K through 12 that you're indirectly spearheading in and of yourself. Because of course no one teaches real estate investing and from the consumer end and nor do we aware of all the variables you're going through. We just want, hey, tell me if I should be a passive or, and if I want to be a passive investor, great. Thank you for the platform. And I'm off to the races. So again, what are some of the methods and instruments you're using and tools you're using to help kind of educate someone like me?
It's almost like a third business here. So
that's what I thought.
So it's getting data, getting information on you as a customer. So it's like, what do we know? Like, where are you? Where do you live in the country?
That makes it sound like this company is you operationalized, because you know how many times you said that you go to data. I'm sorry to interrupt, but it that was a key point. It is you, and not necessarily consciously, but you have said many times, I can tell you're a data-driven decision maker, And it's like, and even here in this answer, you went to, well, we got to go to the data.
Yeah. And just understand the customer, going in there and understanding each customer, your background, where you came from, what you don't know. So that's where it starts. Because if we just blast this out, because our community is big, and just say, hey, this is it, and some people are like, what the heck is this?
Somebody in North Carolina like me would be like, what's this saying?
And it's like a journey. It's like, where are you in a journey? It's like, hey, I have never done this before. Okay, we'll start with some basics. I have done this before. Just show me the deal itself. Okay. I've done this before, and I'm somewhere in the middle. Okay, that'll be something different. And so just kind of building out kind of a system to do that. And that's like collecting information, and that information is just called data.
Data collection,
and then being able to use your data, use your technology to kind of and we have all these great pieces of technology nowadays to kind of personalize that journey as much as possible.
It does have to help, though. Someone like me, even with all the tech in the world and ChatGPT and AI, doubt without the background and your depth and breadth, be able to still put it together in a way that would be running and operationalizing a company the way that you're doing this level. So still a lot of it is you, and a lot of the success that you bring tangibly and intangibly. I know for the sake of time, I'm going to wrap up here. But there was one question I got to go back because I circled it because I wanted to go over it.
All right.
And I wanted to make sure that the audience had a chance. Can't find it now. And of course, I tried to sort of see how good tech is. Craig, as we wrap up, what's the one trend in real estate world that you're most excited about?
The one trend,
and you could pick more.
Well, I mean, the one I'm obviously in it is the advent of how do we incorporate technology across real estate. So we're just at the beginning stages of that. Is if you're in real estate and you've kind of gone down to your local recorder's office or try to get things done at the city, it's all different. It's every time you go down there, it's probably different depending on who you talk to. And there's so much room for growth there. It's like every state, every city, it's different across the board. And we're starting to trickle into technology to make it more efficient. It's really kind of going up the big government bureaucratic mess, right? With all these things, but it's slowly getting picked away. There's becoming efficiencies across the board with that. We can't forget about people. At the end of the day, I still think you still need to have that conversations with people and treat people as people. Don't hide behind the technology. It's one thing, I think, the negative side of technology. Right. But how do we use technology to make ourselves better? How do we use technology as an accelerator? Right, we're learning about that, especially with AI too. At the same time, that's supposed to help us out with things. But I just see that just the beginnings in the real estate industry. It's one that's going to take a while. It's going to take another decade, at least another decade, maybe 2 decades, to really kind of get all the way down where it's not just the top 10, 10% improve the entire industry.
That makes sense because legacy institutions don't roll over no matter how innovative something. You're talking about. It's almost a cliche, but we're talking about the real estate, for crying out loud, one of the most foundational, cornerstones of this country. And it's like, that's not going to overturn no matter what latest and greatest, thing is shining. My last question for you, Craig, is for aspiring entrepreneurs, which is a mass majority of my network, listening to this podcast, what's one golden nugget of wisdom you'd like to leave them with?
I always say, don't let anyone say you can't do something.
Oh, have you been told you can't, Craig?
Yeah, of course. That motivates me, but yeah, of course.
Well, thank you, Craig, for sharing your insights and experiences with our full-time hustler audience. It's been enlightening, and we're sure our listeners will have gained a lot from this conversation. For one, I know I have, and Craig, I do tip my cap, but all intents and purposes and sincerity.
Thanks, Jason. Appreciate it.
Everything off.